Hey, so I want to take a look at Amazon. Ticker symbols on the screen, AMZN. Last time we looked at them was on June 11th, so about a month and a half ago. Their earnings are scheduled to come out soon. So basically, all we want to do right now is uh, back on June 11th, it was trading at 123. Now it's all the way up at around 130. So we're going to cover the news, see what's been going on to drive that increase in price. We'll look at the projections for their earnings report, what we can expect when they do report on. Currently, it's projected to be released on August 3rd. And then we'll close out with technical analysis to see is now a good time to buy or what do we feel is a good time to buy. So, with that out of the way, let's just jump into the news. What's been going on with them? So, right off the bat, we're seeing uh, Dish, that stock, it jumped 19% on a report of talks to sell phone plans through Amazon. So apparently Dish is considering rolling out their own cell phone plan, or maybe they've already done it. I just didn't see any updates on this. So if I missed something, please let me know in the comments. But this is just an idea, and this could definitely uh, boost Amazon's shares, uh, depending on how much revenue that brings in and what kind of deal that is kind of made up there. But if I see more of that, we will mention it. Next, we also have YouTube is pushing for a price competition with Amazon on channels business. And more or less a summary here is when layering multiple streaming services, uh, such as Netflix and I guess Amazon Prime or uh, YouTube Plus, I believe is what it's called. Uh, Apparently, Amazon was allowing you to, I guess, stream, say, a Netflix show, and it would just take a 50% cut of this. Well, now YouTube wants to do a similar strategy, only they're only going to ask for 40% to do this. So uh, I kind of like the idea. I can't imagine this is going to impact their revenue server or their total revenue in a major way, especially this quarter. Maybe a quarter or two down the road, it might, you know, develop into $1 billion line of revenue. Uh, we'll just kind of keep posted on that, see how that plays out. But uh, I'm not expecting that to be a major contributor at this time. But again, it's just a new idea, should help bring in some revenue. And, you know, I like the thought. Next, we have iRobot. Stock surges as UK regulators clear Amazon's acquisition. So, not sure if we mentioned this in the past, but Amazon is working towards purchasing iRobot, which is, those little vacuum, they just kind of vacuum on their own with their own sensors. And this is a $1.7 billion deal. Amazon wants to make this purchase. And so UK said, yeah, it's good. So that's a good thing for them, considering they want this to happen. We also have Amazon Web Services is weighing using AMD's new AI chip. So this won't be until quarter 3, and other players are using NVIDIA, which is a well-known company in this space, but AMD appears to be the current front runner for AWS. We do follow AMD, so once we get to them, we'll probably get a little more insight on this. But uh, yeah, just wanted to mention that. Moving on, we also have Amazon pops a little bit. So on this news of Luke Capital saying AWS slowdown is likely to bottom soon. So apparently it hasn't bottomed yet, but it's very close. So analysts are projecting that. And so I guess it popped. So maybe that's the reason why it went from 123 up to about 130, I believe. Uh, so maybe that's the reason. That definitely doesn't hurt. Next, we also have iRobot. They drop. So apparently the iRobot stock drops on report of EU set to open an in-depth probe into the Amazon deal. Uh, I guess again that $1.7 billion deal. We left a little note here for ourselves saying iRobot has extensive vision for robotics and the patents behind it, and so that's what's uh, I'm imagining is a big piece of this deal of why Amazon wants this company. It's not just Amazon wants a vacuum cleaner company. It's iRobot has these vision type sensors on its vacuum that Amazon could potentially use in their warehouse facilities to, have these artificial intelligence type robots that they can just they can make the warehouse facility, storing things or uh, pulling them off the shelves to soon to be delivered. I believe it's more that capability. That's what Amazon's pursuing. But of course, they'll get this vacuum cleaning business along with it. So uh, we'll see what comes about from this EU probe, what angle they're going to go at it from. But next we have Amazon Web Services is to invest $100 million into Generative AI Innovation Center. I imagine this is likely an offshoot of AWS and its variety of projects. Uh, it's just an innovation center. So I just have to imagine if any ideas, if anyone within the company comes up with ideas, they'll have this funding to back it up to, pursue some of these ideas that they think are better or worse. And uh, if they turn out to be good ideas that can generate revenue for them, great. If not, well, that's kind of the goal where they want to try new things. So if anything does come of that, we'll bring it up. And overall, $100 million to a company like this, that's not that much, and it should yield great results if it plays out as they're hoping. Next, we have Amazon is sued by FTC over deceptive practices with Prime signups and cancellations. So this is a tick on them, the FTC being sued by FTC. And apparently the big fuss is they had this program where it's easy to sign up for Prime, but then it was difficult to cancel the membership. Uh, I believe the next step would be as far as the easy sign. Like basically, they were offering people you can just sign up for free. It's as simple as you click this button and you're signed up, and then they in the fine print, or I'm not sure how big the print is, but they let you know it's only free for a certain amount of time, and you're supposed to either cancel it beforehand to avoid the next fee, which would be like a month or so later. And apparently it's either they're not announcing it efficiently enough, or and probably on top of that, it's not as easy as a click of a button. It's you have to do sort of a process to actually get out of that and cancel it. And so FTC is suing them for that. We also have Amazon set their Prime Day for July 11th or 12th. So that happened. We will follow up on that shortly. And then again, FTC antitrust lawsuit against Amazon is expected in the coming weeks. And so this is a different one. So two FTC suits are happening here. And this one, this antitrust thing. So we have a little snippet here saying that what they're claiming is that Amazon is using its power to benefit online merchants that use its logistics services. So if I was selling something on Amazon and I was using their logistics services, they're going to put me at number one. Meanwhile, maybe my friend over here, he has the better product, but because he doesn't use logistics services, they're putting him at two. And they're saying that's not the right thing to do here. So we'll see how that plays out. Hopefully Amazon's not doing that, but if they are, it should be corrected very soon. So again, we'll see how that plays out. Next we have Pinterest popped as Wells Fargo upgrades, citing an Amazon deal with Pinterest. So apparently it appears to be an affiliate deal where the two's products, so Pinterest, they have their kind of shop, and of course Amazon has their shop through their websites, of course. And I guess the deal, again, it sounds like it's an affiliate deal where Uh, Anything Pinterest is selling, it will show up on Amazon's site and vice versa. And if you use Pinterest to find a product, but then actually make the purchase with Amazon, Pinterest will get a cut, and vice versa. So overall, it should be good for both companies. Clearly, I imagine Pinterest probably gains more because Amazon's so much larger. But overall, it should be beneficial to both companies. Uh, Not that probably won't play out into the financial statements in terms of like, oh, we can see this is from Pinterest revenue. I don't expect that to be there. It would just be lumped together in revenue, sales. But if it is broken out, that'd be nice to see, how much of a benefit that does play. Again, because it's so close to earnings, I wouldn't expect to see any type of real benefit in this quarter. But, maybe a year later, it would potentially be broken out that, oh yeah, we made $1 billion from this deal or something. But we'll see. If anything does come up, I'll be sure to bring it up. Next, we have the EU is looking at self-preferencing in its probe of Amazon's iRobot takeover. Similar to them giving preference to people using their logistics services and that concern, with this deal, the EU is focusing on, hey, if you buy this vacuum cleaner, are you going to just, if someone types in robotic or self-vacuuming products, are you just going to put your iRobot item top of the line because it's yours and you're going to make more money that way by selling that product? Or are you going to do the right thing and just show someone else's product, your product, the top, if there's a list of, say, the top 5, are you going to have a variety in that 5? Or are you just going to put your top 5? So that's a concern for them. I'm sure Amazon's going to say the right things. We'll see how it plays out. I don't expect, if that's the targeted issue, I don't think it's going to get blocked over that at this stage. But it's something that they're going to make Amazon aware of and try to avoid that. So I think that one should be fine. We also have Amazon is targeting Ohio for a big AWS operation expansion. This expansion is projecting to be $7.8 billion for an AWS data center. I mean, that's big. I mean, it's kind of expected. It's interesting that they chose Ohio because Intel's going to be there. So I'm wondering if there's going to be some sort of deal there. But, big expenditure. That's definitely going to hit the financial statements. So making a note of that one. Amazon's also trying a new thing where they're going to tap local businesses for this last mile delivery network. And essentially what it's going to do is instead of using, say, those Amazon Prime vans or trucks or whatever they have, there's going to be, a pizza shop or maybe a flower delivery company or just any type of delivery company that's not exactly Amazon, but they're making deliveries of their own. What Amazon is proposing is if this is in the area of that flower shop or that pizza shop, they might just drop off, say, 5-10 packages one day, and in their normal routine of delivering pizzas to the neighborhood, they can also just drop off these packages, and it's a win-win for both companies. Amazon saves cost on the delivery drivers, but of course they'll make a payment to that company, and then the company makes that flower or pizza shop, they'll make money off it too. So it's kind of a win-win. We'll see how that plays out in terms of cost savings. Again, I can't imagine it would be much, but they're trying to save some dollars here, and I can respect that. Next, we have Amazon CEO is confident on delivery upside ahead of Prime Day. So I didn't really hear anything in terms of like bad news about it. So I assume everything was fine in terms of Prime Day deliveries and expectations. We also had iRobot tick lower. as the planned $1.65 billion sale of Amazon gets that in-depth EU review, so that's still ongoing at this point. And then the Pinterest Amazon partnership, that's live. So I don't know when they expected it to come out, but apparently it's already out, it's active. We'll see how that plays out. Again, probably won't make a large difference, like noticeable enough to be broken out, but if it is, we'll take a look for sure. Uh, but yeah, it definitely won't show up in the current financial statements, but maybe the week after, or not the week after, but the year after, it might become noticeable. Here we have Amazon sets a Prime Day sales records, and so again, no notice of missing deliveries or anything. So looks like they did a great job there. And then we also have iRobot and these other companies apparently gain amid the Microsoft win. So that's not related to Amazon, but Amazon sees this as a win, and other investors, such as myself, we're seeing this as a win because if they're going to allow Microsoft to purchase Activision, which was a much larger deal, then there shouldn't really be any concern with this deal. Of course, there's going to be, you have to meet these certain checks because you need the deal to be, make sense and not harmful to other businesses. But the fact that that one went through at such a large scale, it's kind of hinting that this one will go through also. Just might take a little bit longer, but it should go through with hardly any issues. But again, we'll continue to follow that. I believe this is the last piece before we shift to what we can expect in terms of their upcoming financial statements. So Amazon's planning on a $120 million satellite processing site for internet from space. So they want to have a network established in orbit by 2026. Apparently this is going to be worth billions of dollars over the time, but as of right now it's just 120 million. And I say just because, again, this is like $1 trillion company. But this is mostly from Boeing Lockheed joint venture with United Launch Alliance and Jeff Bezos's space company Blue Origin. So that's kind of down the road, 2026. But we'll keep track because this is most likely going to continue to build up. Because, again, they're saying this is worth billions of dollars. So we're probably going to be seeing a trickling of money going into this idea. So curious to see how it plays out and kind of what the angle is in terms of a benefit, but very interesting. So let's move on to what we're expecting from this company. So just some quick highlights before we go to the next slide. Amazon, they're expected to post quarterly earnings of 34 cents per share, which would be a year-over-year change of positive 240%. The revenues are expected to be about 131 to 132 billion dollars, which would be up about 8 to 9%, which that's great for a company this large. Their last reported quarter, they expected to do 21 cents per share. They actually did 31 cents. And then the last piece, over the last 4 quarters, they've beaten the earnings per share estimates twice. So I think this is going to be beneficial here. I just pulled out what the analysts are saying. So at the very top, it's broken into 3 sections. We have the earnings at the top. We have the current quarter, the next quarter, the current year, and then the next year. So in terms of the estimate, there's that 35 cents. Here's that 131 billion in revenues, and that roughly 8 to 9% sales growth. I guess we'll just kind of digest this a little bit. Current year, they're projecting about $1.60 in earnings per share. Big growth next year. That's what they're projecting. Looking at next quarter also, they're also thinking about 8 to 9%. So no slowdown in growth here. Current year, for the full year, this year, they're saying about $561 billion. So we'll keep track, see if that's lining up, because as we know, these fluctuate. As results come in, they modify these. So we'll see how these get changed just over time. We can circle back to these and just compare as the year passes. But then next year, they're saying 11 to 12% revenue growth. I mean, that's tremendous. For a company this large, if that actually comes true, uh, this is a good company to pick up. I'm telling you. But the last piece here, this earnings history, this is kind of, and I'm going to point this out when we get to the technical analysis. We mentioned how they've exceeded expectations twice, and so they did that in, it looks like, the third quarter of 22, and also the last quarter they beat by 50%. So it's kind of it's hard to put too much weight behind this, and I say that because the earnings per share are so small. I mean, here we have the actuals of this was negative 20 cents, and that's why I'm very confident that that's why we saw such a large pullback in the stock around last year this time. We saw a big drop off, and this is why, just because it was negative 20 cents. I mean, that's it. It's definitely not common for a company like this to be negative, but the trade of why I say it's like I don't want to put too much weight behind it is because the values are so small. I mean, other companies this large, they make so much more earnings per share. It's kind of it's confusing. So I'm definitely gonna be looking into the financial statements to understand why is it so. It's just because their margins have to be so small. They're making all this revenue, but they're not making a lot of margin. That has to be the answer here. Um, so I guess that's the pro and con here, is that their their earnings per share, they're projected to be so small that if they hit or miss, meaning if it right now it's 35 cents, if they win and say do 40 cents per share, that's going to show up as a surprise hit of like 10% or something. It's crazy. And then if they miss and do like 30 cents, it's going to show as a miss of like 10%. Uh, so I don't know. I just feel like that's shouldn't put as much weight into that. I would be more concerned with, are they still growing revenue at this pace? Because at some point they're going to make those margins grow a little more. I'm surprised for how long Amazon's been around that they haven't done this already, boost the margins more. But we'll look into the financial statements, see if anything kind of shakes out there. But at this point, let's pivot into the technical analysis. So as we mentioned, last time we looked at this was on June 11th. So if I zoom in a little bit here, this was when we looked. June 11th was, I imagine, a Sunday. And so it was trading at 123, which was the top of our uptrend range. The uptrend range, and let me just share this before we go any further. So here we have Amazon. Amazon was trading at 123. We had a buy point marked at 108, and we had resistance at 167. So definitely closer to the buy half, but I felt it probably because it was at the top of that uptrend channel. I felt it's probably a fair value as opposed to a buy. That might change as we dig a little deeper. And then resistance at 167. I'll explain the reason behind that. And then we noted this short-term uptrend, which started at January. So again, just by looking at it, we noticed that's still in effect. But yeah, so whenever we last checked in, it was this little sliver, this little green bar, and it was at the top of the channel. The channel's still continuing. We're definitely at the very high end. We were actually exceeding that uptrend for a couple weeks, and then just recently we pulled back into the range, but still at the very top of it. Preferably, I'd like it to pull back to the bottom into like the 115 to 120 range. I noted 108, which is this green line down here. If we zoom out, see a little more of this company, and I just want to point out right around here, this was when they came out with those negative earnings, which was like a negative surprise of like 1,000 or something, or just a high digit. They had that negative 20 cents per share, this is right around the time they would have reported earnings, and we see this big slide from there. And it took all the way till now to kind of get back to where it was before. But so just scaling out a little bit, we chose 108 primarily because of this point right here. In mid 2022, it seemed to kind of catch some support here. It kind of hesitated here also in October of 22. And then that's really all the support I saw and why I clocked it. We also have another point down here. You know, there's some, but at this point we've kind of passed it enough that it's not worth keeping on our spreadsheet at this time. If things change, of course, we'll add it back. But that's kind of the story behind why 108 is in play. But yeah, this uptrend is still continuing, so I can leave that note in place here. Currently 123. Let me just update that to it's 130. Buy point for this one, 108 is getting a little bit. It still definitely can happen. It's not that far that I would be like super surprised if it pulled back to that point. Based on the news, it looks like the earnings and the financial statements should all still be in play. I'm tempted to give this one a buy just because it seems like there's some good ideas happening at Amazon, especially with that purchase that could help with the warehouses. Some ideas in terms of like the streaming. Yeah, there's definitely some good news, but of course those FTC lawsuits, those could definitely hurt. I don't think they're going to be fine worthy, but they could be. Especially one of the two could be. But yeah, so I guess buy points for this one, 108, we'll keep that. If I wanted to pick this one up at the very bottom of the channel, going into next week because this week's over, the very bottom would be about 117. If we project this out about a month, I'm hoping to circle back to this. It'd be about 120, 121. So I'm going to add 121. And that's probably going to be my point of interest. And that might be it. Because when we scale back out, we don't really have much trading really at all. I mean, this one went from 108 all the way up to 153 very quickly back in 2020. Then it stayed up above 153. Then in 2022, it traded down to like the 140s and then just fell like a rock down to like 108 to 115 range. So not much activity is really happened where it is right now. So based on what it's doing, I kind of would imagine it would just kind of build this area out a little more, have some more trade activity between 153, 108, but at the same time, there's that possibility that it could just run up to 153, all the way up to 167 in all honesty, and then maybe just start trading between that range again, 153 to 167, just like it did here in like 2020, 2021. But right now, we'll just play it as we see it. So those are the two buy points that I'm looking at. 108 if it pulled back there because we saw that support from earlier. And then also if this uptrend's still intact. So if it were to pull back to the bottom of the range, maybe to like to 121, I'd be comfortable picking it up at that price. So at this time, I would say 121 is my buy point on this one. Resistance for this, it might struggle a little bit at around like 145. For some reason, it did meet some resistance here. It had a good push all the way up to like 134, got rejected. I feel like that's probably more, it was outpacing that uptrend, so people just pulled it down a little bit. Because otherwise, let me just put in a point here just to see, and I'll make it red. We'll make it really a skinny line. For whatever reason, once it passed through 135, it popped above it for about 2 weeks, pulled right back down, tried to get above it again, got rejected. Here we are again, and it's struggling to get over 134 for some reason. I don't think it's going to be a strong point of resistance. I think this uptrend will still continue out. It might consolidate for a little bit once earnings come out. Then we'll have like a true decision on, yeah, this one's going to keep flying. I think as long as it hits its earning per share mark and that revenue mark, this one should continue upward just like it's doing, maybe even at a faster pace. And for that reason, I'm kind of hesitating on should I pick it up now? Just kind of overpay today in order to save tomorrow. Because in reality, there's not much resistance for this one until we get to 167. So just something to keep in mind here. And yeah, we could probably put in a couple like intermediary resistance points because just a lot of activity happened between 153 and 167. So, we'll see how it plays out. But yeah, the buy points for me, assuming we're patient enough to do it, would be 108 and like 121. I feel like that's fair. So hopefully, it might pull back a little bit leading up to earnings. We'll see. Resistance, we had 167 because again, that's up here. For whatever reason, it struggled to get above 167. It definitely did, and then it kind of acted as support. So a couple points in here. I mean, we could draw in a couple other resistance points in here, just like the faint kind. So we have that one. We can also put one up here towards the top of the channel, just below the black line, just so we can see that. But otherwise, I'm just not... I guess what we can do is I'll add in 135, only because it's, for whatever reason, it does kind of stall out there. Like, there's that 1 point. I guess it really was just that 1 point. Got above here, came right back. Nothing really major, though. I did add 135, but 167 is really the point of interest on this one. I'm going to update to today's date. That's fine. The note, the short-term uptrend since January, that's still in effect. I guess what we can do is just add into buy dips on this one. So the fact that it's kind of hanging out in this range, that might be like our consolidation window. Honestly, what I'm considering doing is picking this one up. I gave it a fair value rating. Preferably, I'd like it to pull back a little bit, but I might just add in a share at this point because I've seen this on other of these Mang stocks like Meta, Google, and them. They'll like consolidate for a month roughly at some point, just like it's doing here between about 130, 135, and then all of a sudden they reaccelerate. So if this is another situation like that, we might just happen to be at a point where we caught this one and we can catch it and pick it up. But that's just me. Again, I wouldn't do anything major in this, just maybe like one share just to test the waters. But let me know your thoughts on it. Are you going to be more patient on this, or just how do you see it? But that wraps this up. Just a quick recap here. I'm going to leave Amazon as a blue colored stock, meaning fair value, for two reasons, and let me just share why. Number one, it's in the fair value range. Yes, it's on the top, which historically I've kind of given it a red, meaning it's at resistance. We also have slight resistance at 135. Not major. Really, I can take that one out. But it's mainly because if we look at our kind of support line at 108 and the resistance point at 167. I mean, we're on the lower half, and it kind of slowed down based on other stocks that, I mean, we can't really compare the stocks, but um, that's kind of why. The fact that the range is so large and we're on the buy half of that wide range between 108 and 167, to me, I feel like there's enough cushion in there that we can give it the fair value. If this was far exceeding the uptrend, yes, I would mark that red, even if it was just say like $5 more. If we would have looked at this last week and it was at 135, I probably would give it the red because it's over exceeding the uptrend range. But because this one's, yes, it's at the top, but it's in the range, I'm going to give it the benefit of the doubt, only because of experience. So to continue on with the recap, so it's currently at 130. Buy points that I have marked are 108 and 121. Again, I'm considering reaching a little bit. Might pick this one up at like 130. If it opens at 129, I might pick it up there. Resistance at 135. That's not major though. 167 is the real resistance point, and that's why we have that in bold. We updated the dates. Again, earnings are scheduled to come out August 3rd, and that short-term uptrend since January, that's still in effect. So we're looking to buy dips. And I feel like because we're seeing a little bit of consolidation here for the past 4 weeks between 130, 135, we happen to be at 130. I'm considering taking a shot on it. So let me know your thoughts. Would you do the same, or is there a buy point in mind that you're looking at in terms of the news? Is there something that you came across that I just missed or know a little more about? Please let me know. Or if you have any questions, feel free to ask those, and I'll do my best to answer them. But otherwise, that wraps us up. So please like, subscribe, and I'll see you on the next one. Bye.